Monday, May 19th. Some may call it post Moody's Day. The futures are down. Just get ready because today is expected to be a bad day. I'm going to go out on a limb. I don't think we wind up positive, but I think we wind up better than we opened. So just be forewarned. I am recording the Investing Expert podcast with Seeking Alpha tomorrow. They told me, I said, what's the agenda? Well, let's just chat. And if anybody has been a longtime listeners will know that is a dangerous thing because Gary math can come in where I may say, hey, I'm up 5,000% on this. And then Rena will go, well, the stock is only up 40% in the last year. So numbers may come into play. So I spent all weekend doing things like that. It is going to be a great podcast because I've got some great things. And whatever I don't go over in the podcast, I'm going to do on their podcast. I'll do it on this podcast. So I'll release the notes and everything that I have from that podcast after I record it. We're going to go over the Moody's downgrade. We're going to go over some stocks that are bullish. We're going to go over Buffett's secret stock. He is building a position in his secret stock. We'll go over what that means. We will go over what potentially that stock is. Nobody knows, but we're going to try and reveal it because I built a screener to try and find out what the stock is. We will go over JPMorgan is more bullish than ever. I will also go over 3 things. If I had $10,000 and building a portfolio, what would I do? 3 things. And education wise, we're going to go over a lot of education at the end of this podcast. So sit back, enjoy. The Moody's downgrade of U.S. debt. Rates will go up because of our debt. What it means is the U.S. can't be trusted to actually pay back its debt. Now, that's not essentially what it means, but think of it like a car. You go in for a car, and they have to run your credit score. Somebody with an 800 credit score may get a better rate than somebody with a 200 or 300 credit score. That's all that means. It was brought down as the last one. But there's a couple of things. Just be warned. The first time in 2011, the market, that was the low. 2 months later, it pulled back to this level, but it was essentially the low. The debt downgrade was the bottom and the beginning of a 14-year bull run. That was 2011 when the first one of the 3 downgraded. I put my thoughts into this bonus podcast. Why the Moody's downgrade of the U.S. may be a big deal, or is it? And I laid out my weekly plan right there. So I did that on Substack. You can join the newsletter for free. This particular one is a bonus podcast, so it is paid for, but you can join it for free and you get a free 7-day trial when you join. So, if you don't get it or you want it, ask me. I like the axe. But again, most of these newsletters are absolutely free. So sign up. If you have any questions and you can't remember dailystockpick.substack.com, just remember Linktree, linktr.ee/dailystockpick. The link is actually below my head during this entire podcast. So if you want any of these newsletters, you can get them. It's like a Cliff Notes for all you boomers out there. It's like a Cliff Notes. So I put my thoughts into there. Biggest movers so far of today, it's Novavax up 16%. Again, I'm not a huge biopharma guy, but that stuff seems to move. Bitcoin is down, which I find interesting, as when we look at the 5-day, when the announcement actually happened on Friday, it wasn't down. And all weekend we went up. And then all of a sudden, last night, late at night, we saw that crash. Not sure if it's the Moody's thing, but maybe it saw the futures are down significantly, and maybe Bitcoin just followed. So I presented my thesis on this, but go and look at it. If you're, remember how I talked about, just be forewarned, but here are my thoughts if you want to read them. Remember I presented a thesis that we might be range bound. And I'll go over this more in the Investing Experts podcast. But remember, I did calculations, and I think we're between 5,000 and 6,000 on the S&P, which would put SPY at between 500 and 600. And it has to do with earnings. But this, again, puts it into perspective. Besson is sending early signs that a Liberation Day 2.0 could hit this summer. Remember how bad Liberation Day was? If that happens, expect a buy the dip mentality. Expect it. Okay? Because Brian right here, I know the angry and usually wrong economist told you big rallies like this only happen in bear markets. Everybody's saying this is a bear market bounce, but it simply is not true. The S&P is up more than 19% in 27 trading days currently, up more than 30% a year later, and never lower after previous instances. Okay, so if you're buying for more than a year, this dip that you're seeing today might be a good buy the dip mentality. Doesn't mean that we're done going down. Doesn't mean that there's not going to be more selling. But it does kind of indicate, hey, we're in a buy the dip mentality. And when you hit 6,000, that's what I'm kind of saying, is when you come close to 600 on SPY. Okay, or the S&P, whatever you follow, when you come close to it, again, Friday was 594. That's within, like, listen, if 100 men stood up with erections, that's within the line of, the average right there. It's a bad analogy. Man, I'm going to get canceled on this one. But again, that's super, super close. If you are playing for the upside, that's close enough that you should be taking profits. Again, my investments are for more than one year. So that's the way I look at things. And when I look at this from Ryan, I say, okay, any dip that I see down below 600, 6,000, 600 on SPY, that's what I want to do. And by the way, just to give you an update, remember the strategy that I ran, the Liberation Day strategy? It gave you a buy on QQQ. Hasn't gotten you a buy on the S&P 500 yet, but on QQQ, where it performs really well, but you get 64% win. So out of over 9 years, 14 positions, 64% of the time you win, and it got you in on QQQ at 521. You're trading at 514. Remember, this is based on a weekly candle. So if you're investing for more than a year, Ryan says that we've got the Liberation Day strategy. You've got a dip. You've got an opportunity. I'm not saying that in the next week you won't lose money. I'm not saying that in the next month you won't lose money. But the reality of the numbers is that in 1 year, you probably are doing fairly well. We're in a different situation. Again, the debt has never been higher. We've got all three ratings agencies. So there always comes risk. But JPMorgan is saying the S&P is on its way to new all-time highs with the correction unlikely. What could lead to a near-term pullback? An NVIDIA earnings miss, which is highly likely, because they have such huge expectations. And remember, they already did a $5 billion write-down, $500 billion, I forget exactly what it was. But there could also be stalled trade negotiations or a negative shock on U.S.-China tariffs, Liberation Day 2.0. That could lead to another pullback. 10% seems to be the new baseline on trade negotiations. Positioning. JPMorgan strategy team notes a slowing of retail buying impulse largely completed, short covering by macro hedge funds. Remember, and we're going to go over this. I think I have a chart in this. The big money is still sitting out. This is retail buying. So understand there are significant risks, but the Liberation Day strategy, the fact that we've got a potential negotiation for a huge tax bill that could lower spending, because there's a lot of holdouts on that Republican who want to lower spending. So maybe it just triggers that, hey, if we're going to all-time new highs, you don't want to sit this out. Make sure you are not 100% cash. Whatever percent cash you're comfortable with, get into that position. Whether it's 40%, whether it's 20%, whether it's 10%, whatever it is. But here's a bunch of free indicators from Trendspider that you can import into your system. Weinstein is something that I love. I love that one. Then you've got HTF, you got TTM Squeeze Labs, breakout and fake out, candle coloring. There are a lot of free indicators in Trendspider that you can build. In fact, I just had a meeting on Friday with Trendspider. They are releasing a new large language model that will come in the next few weeks. I don't have an exact date, but I was told, because I'm doing an investing with AI spaces with Wolf on Wednesday, that I am allowed to promote this, and I'm going to get access to it today. I'm going to try it. They have told me that it is game changing. It is basically Trendspider, and you can go in here and you can say, well, what are the earnings per share of this stock or this ETF, and tell me and chart it. Tell me the last time that Nancy Pelosi bought this stock or ETF and chart it on the chart. You can do a lot of those types of things. It sounds phenomenal. It's going to take a lot of time to probably get in there. And just like any other large language model, it's probably going to have some bugs. That's why they're doing beta with a couple of their influencer folks. But I like it. I like what Trendspider's doing. Now, if you want Trendspider and you want my 4-hour algorithm, it's the top link right here. And you get over here, $50 a month, 52. And if you sign up for the yearly plan, you get my 4-hour algorithm, you get the 65-minute algorithm, you get all the watch lists, you get all the scanners, you get every tool that I use to manage my own portfolio. And you can import all of these and more for free. So if we were in a dot bomb, okay, this is a great chart. Because the NASDAQ, after the release of Netscape, all of you older people probably remember the browser Netscape. It was one of the first browsers. It was one of the largest product adoptions in history of any product. And ChatGPT is tracking this super, super close. Okay, so up here you can see the percentage change in 3 years after Netscape release versus ChatGPT. That's tracking it close. And by the way, this little thing, NASDAQ composite percentage change. Look, you've still got room to run. You're only in 1997. And that's the great thing, is that we probably still have. Now, multiples were significantly higher by the time you got to 2000 and you dropped. So I think it's interesting. I think it's something to watch. I think it's something to keep, because ChatGPT, again, like Netscape, is one of the fastest integrations of a product into modern culture that we've ever seen. And that's just ChatGPT. That doesn't include Perplexity. That doesn't include Grok. Okay? So there's your history lesson. But I want to talk about going forward. Ray Dalio has said, and he is a legendary investor, and he said a few weeks ago, he said the U.S. is going into a death spiral of debt. Okay? I usually don't pay attention, but with the third downgrade of the U.S. of the 3 credit agencies, is he right? It's something to keep an eye on. And I mentioned this earlier. Global fund managers still want nothing to do with U.S. equities here. This is a mom and pop continued to buy over the past 6 weeks. I really don't know of another time mom and pop were right and the big boys were wrong. Is this a bear market bounce? Because if you look at QQQ on the 4-hour, you can see we have been extended on the MACD. It is high. The RSI is at 75. Okay, switch it over to a daily and we can look. The RSI, again, 70. You're overbought. You're finally above your 200-day. I would be looking at that 492 in gap fill as a support level if we continue down. You're at 514 in pre-market. But again, large money is still sitting on the sidelines. At some point in time, they have to come in. Now, I want to bring up Berkshire is in the process of building a secret position. We know this. You may have seen the news about it. But Berkshire Hathaway filed a regulatory report that disclosed it is withholding the identity of one or more new stock holdings by requesting confidential treatment from the SEC. What happens is this avoids market disruption. When they notify the SEC, they let them build the position without letting the market know. If we knew when they started building a position in a particular stock, there is so much money that would pour into that, the price would artificially inflate. So the SEC allows them to build this position. It's not a way of keeping the price down. It's more a way of keeping the market working and fair and even. Warren Buffett decides which stock to buy by focusing on the intrinsic value of a business and seeking investments that are trading below their value. His main characteristic: strong, consistent return on equity over many years, compound to industry peers, healthy and growing profit margins. All of this will be in the newsletter, by the way, in detail. Low levels of debt, a sustainable competitive advantage or moat, a long proven track record. Now, you can measure strong, consistent return on equity. You can measure healthy and growing profit margins. You can measure low levels of debt. You can't measure moat. A long proven track record of often preferred companies with at least 10 to 15 years of solid performance. You can track that one. Predictable growing earnings and cash flows. You can predict that one. Okay? Buying only when the stock price offers a significant margin of safety below its estimate of intrinsic value, often calculated using discount flow cash flow analysis. Buffett views himself as buying businesses, not just stocks, and priorities, quality, durability, and reasonable pricing over short-term market trends. So what's this mystery stock? Maybe it's one of these. Value Sense. Here are the top 10 most undervalued growth stocks according to Value Sense's algorithm. Enbridge, Taiwan Semi. Remember, he got out of Taiwan Semi because he said the political risk wasn't worth it. Is it now? Qualcomm, Amgen, gold. Is he going into gold? Barrick Gold, the largest miner. Fox, Toast. I'd be shocked if he goes into Toast. Not past it, Is he going into more energy? Diamondback Energy. Is he going into SMCI? I would argue FANG is probably more than SMCI. So I'm not sure it's that one. But in Seeking Alpha, I built this. Warren Buffett, how to great stuff. Revenue growth greater than 5%. Profit growth greater than 7%. Free cash flow greater than 80%. Return on income 15. Net to debt, free cash flow under 5. Debt to equity under 80%. Came up with what? 33 stocks right now? Let's sort them by market cap because he goes big. Is it NVIDIA? I doubt it. Could be. Is it Google? The multiple's lower. Is it Netflix at all-time highs? No freaking way. Is it Palantir? Absolutely not. Is it ServiceNow? Probably not. Arista Networks? Probably not. Is it Zscaler? But we come up with Toast again. Toast is in there. Again, I think he's probably going into the energy portion. But this is a good little list of stocks if you wanted to invest in them. And we can sort them by quant rating. Okay? Freshworks, which is the number one. Again, it fits all of Buffett stuff. Freshworks, it's an application software. Okay? This is one where I saw the CEO and I loved the CEO. It's trading right in the middle of its 52-week range. The quant says it's a super strong buy. Wall Street says it's worth $19. It's currently trading at $15. They've got all the growth needed. The growth, 20% year over year revenue. It doesn't have the tenure, but I like this one. And again, so this type of research can lead you down a path of finding a stock that might be a good entry. Okay? So I like this screener. You want this screener? Import it into Trendspider. I will include it into the newsletter. Into Seeking Alpha. You can have this screener. Just import it. I will include it in the newsletter. This is a big week, by the way. Okay? We've got all week. We've got Computex, which kicked off, by the way, with NVIDIA unveils next-gen AI tech and Taiwan supercomputer project. And NVIDIA is down 2%. This is huge. This is a catalyst. It's a good catalyst. And then Qualcomm follows it up to make the custom data center CPUs link to NVIDIA chips. Huge for Qualcomm. Qualcomm's down. Okay, but you've got those two speeches and you've got those two details. Again, I like both stocks. Both are in the core portfolio. Now, what else do you have this week? Monday, you've got a Microsoft conference. You've got their developer conference, which and JPMorgan Investment Day. Tuesday, you've got a Google I/O conference. Again, could be huge for Google to show off monetizing all of their AI stuff and how they're going to do it. This Catalyst Watch is the greatest email that comes out on Friday, and you can set up your absolute week. Wednesday, we've got Snowflake earnings. And I say that because I expect Snowflake to be like most of the other AIs. And I've said this before. What have I said? I have said trade Snowflake within this range. When it dips under 150, start buying, and it goes back to 200. Where are we right now? 183. I like Snowflake like that. I expect a bounce. You've also got WRD, which is WeRide, reporting earnings. Huge volatility. Go and check out what it's supposed to do. Huge volatility. I'm not a huge fan of this, but if you want to trade this one in the 1 hour stock battle, okay, over the last 59 days, you've lost 48% if you bought and held this. Again, that's 2 months. Okay, but if you've traded this on the 1 hour stock battle strategy right here, you've made 5%. You win 53% of the time. You're out right now. Does it get you in before earnings? Maybe. Go and figure it out. Again, you can import this strategy directly into your Trendspider if you have it. I can share it. If you'd like it, just email me and let me know. Another one on Wednesday that's huge is a top 10 2025 Seeking Alpha stock, Urban Outfitters. This one is expected to get huge move. Is that one reporting? I think so. Let's see. Urban let's see. Wednesday. Yeah. Urban, after the reports are released, URBN. So again, I like those two. Thursday, the big movers. We've got Webull and let's see, what was the other one? It was Webull and AAP, which is Advanced Auto Parts. They're expected to be huge volatility for those. So again, I like that Catalyst Watch. Now, a stock that I trimmed, this is the earnings week ahead. Pick your battle. I mean, they go into detail in this article over which are the big earnings. Like Wednesday, Target could be a big one. Zoom Communications. You've got Thursday. You've got Workday, which I actually like. You've got a bunch. They go into more detail here in this article. So it is a big earnings week. Now, one stock that I trimmed, but it's all-time highs now at $11.91. I sold at $9.85. You're never going to be perfect. I made 120% on this, and I was perfectly fine trimming it. I am still 50% in this one. Some think the rally is just starting on Netflix. Okay, Barron's. Netflix is still a buy at $11.73. $1,772. Netflix is one that just a short time ago you could have gotten for $800. The algorithm got you in right here at $930. That's a great move past earnings. And if you go on a weekly one, look at how strong this stock has been. Who's disconnecting theirs? Right now on a weekly, you're at 70 on the RSI. Your MACD is up 80 points above the oscillator. I'm not touching it until we see some type of pullback on a weekly. I'm going to be patient. I'm perfectly fine sitting this out. I own it in QQQ. I own it in a bunch of ETFs. And I also own 50% of my original position, which is way, way up. I am perfectly fine. Did I make a mistake in selling? Obviously, because the market told me I made a mistake in selling. I sold it right at earnings at around $980. And I got rid of quite a bit of it. So I was raising cash. It's a learning experience. You know, again, in this market, PE doesn't always matter. If we go and look at Netflix, it's a hold in the quant. Why? The valuation's just extended. But nobody is disconnecting their Netflix. What did I watch? I'm in the middle of the Osama bin Laden, mini series, 3 episodes. Love it. Love it. It's just a huge, again, it's my go-to when I go and watch something. Now, another stock that I like, Coinbase. First crypto native stock in the S&P 500. It's going to go in there, I think Tuesday is when it goes in. It's in the cup and handle. That's bullish. So let's look at Coinbase. Do we have a strategy that works in Coinbase? Well, the 4-hour algorithm makes you 407% versus 352% buy and hold. Okay, it got you in at 168. You're at 266. You've almost doubled your money since April 10th in the 4-hour algorithm. The average win, 34%. Again, it beats buy and hold. You see it on the screen. So we have a strategy for that. And when we get a bullish signal with a cup and handles type thing, yes. And you can even ask, going forward with the large language model and Trendspider, you're going to be able to say, do you see any formations, anything like a cup and handle? You can ask it that. It will look for it. Okay? I like it. Again, I like it. Now, dumb money. This is Chris Camillo. AI is the space to be. And in this clip, it's 34 seconds. I will post it in the newsletter so you can watch it. What stocks are you betting on? This one in particular, they are betting on NVIDIA and they're betting on Tesla. Okay? And the only reason for Tesla is Optimus. And you want a strategy for NVIDIA? Here you go. See a pre-earnings pop. Back tested a simple strategy. Long candle, 15 candles before earnings. Exit the day of the report. Since its 1999 IPO, 330% total return. 67% win rate. 2.82% average return per trade. Again, very simple. Long candles before earnings. And I think I actually have this one. Let's see. I think it's Netflix. Let's see. Netflix earnings strategy. I think this one is 10. Let's run it on NVIDIA and see if this one works. NVIDIA. Let's see if this one works. Yeah. I mean, it doesn't beat buy and hold, but 10 years. Your average win, 6%. 60% win rate on this one. And it gets you in 10 days before the earnings. So again, I like these strategies in Trendspider. You can find a strategy that works. So the 4-hour algorithm, by the way, in NVIDIA works pretty well. You make 298% versus 375. Find a strategy that works and find the stocks that work. One that you want to know, NVIDIA seems like a good buy. The next 3 weeks show a strong win rate and solid average returns right into earnings at month end. It's setting up nicely. It's really setting up nicely. Now, I do feel the same way about Google. Now, I'll play this one. We'll turn the volume down. The strong thesis is I've been trimming Google. And am I right in this one? I don't know. The multiple is very low. I like their Waymo strategy. They have some other income streams that are coming up, but I'm not sure if any of it replaces the loss in search revenue near term. So I'm playing more market dynamics since the market is focused 100% on Google, on search. That's it. They're just focused on search. So I agree with Chris in this one. Now, it is a top 10 position for me. Probably top 5 still, I would think. Maybe top 7. I have trimmed quite a bit. The 4-hour algorithm is getting you in. But you can see the 4-hour algorithm doesn't beat buy and hold. So I'm a little bit nervous about this one and holding so much of it, and I am actively getting out of it. But there's no real catalyst. This week is the Google I/O, and I heard on the All In podcast, Sundar Pichai, their CEO, he did a really good job of convincing me that they are in this. And I like it. I like it. Remember, I just went over a few stocks. I could be completely wrong that their conference this week could be a catalyst, but I could be completely wrong that it's a nothing burger as well. But I'll point out to you, you don't need a bunch of names in a portfolio. What you need in a portfolio is a base. For me, that was Apple over the years. Okay, that's my risk tolerance. I was perfectly fine in Apple because it didn't trade at 34 times forward earnings. It wasn't only growing at 5% year over year. I mean, we can look at the valuation of this. Right now, it's trading at 29 forward earnings, 29 times. That's a lot. It's a lot. Is it a lot over the course of this? No, but the growth was much more. So we can select metrics and we can look at valuation and we can go to PE. And I'm going to show you the PE of Apple over a long time period. Is it cheap? No. Is it expensive? Yes. And then you go in and you look at the PE of this and you say, well, what's the growth? They're growing at 4.9% revenue year over year. So that, my Apple position is not doing well. For most people, their risk tolerance would put their base in VOO or QQQ or any one of those Vanguard ETFs. Okay? The second thing that you need in a portfolio is 1 to 2 names you believe in. Let it compound. Add to them as they dip if the earnings and growth continue. If the market deems the story has changed and the stock starts to slide on a monthly candle, maybe reevaluate. And we can go and take a look at Apple on a monthly candle. Has the story changed? I would say no. We're still above that 50-day. It's below its 9-month, but it still hasn't changed. It's just extended. And the third thing you need in a portfolio are short-term stocks to trade and win if you'd like and it fits your lifestyle. You don't need this. This is completely optional. If you have a $10,000 portfolio, you could have $9,000 in VOO and $1,000 in Tesla or NVIDIA or $500 in both. Okay? And those could grow and outside the $9,000 in time. The $1,000 or $500, again, it could compound and grow out. While the VOO is growing slower, your names could grow more. But if they don't, having that $9,000 base in the S&P 500 could provide a security blanket just in case you're wrong. Don't outsize a position. Taking profits is your choice. I did not take profits on Apple. And I've gone over this many, many times where I've sat in 40% downturns. You know, this is 2012. I didn't sell Apple. That's a 44% downturn. If you had $10,000 in Apple, it is now close to $5,000. Okay, I did not. It was the right choice, but many times it could be the wrong choice. Look at Microsoft. We'll go and look at a monthly of Microsoft because Microsoft did nothing for a look at 2021 all the way to 2023, but it did nothing from 2002, it was trading at what, $30? Well, that's where you were trading in 2012, 10 years later. So it did nothing. You have to understand, that those are the types of things that you want to look at. Is it compounding on a month-over-month period? And we can look at a monthly on Amazon because it's very similar. Because Amazon has hit this peak, okay? And it really hasn't done anything. At 184, you were trading this last year at this time. Okay, 184 was where you're at. You're at 205 right now, but that's after its earnings popped it back up. So remember, you want to build your portfolio and make sure that you're doing this. This is part of the education process. And I'll tell you another education process. Let's say you sold on Inauguration Day, then watch stocks fall 20%, followed by a furious rally, thus missing a buying opportunity. You're still sitting in cash. Now what? Ben does a great job in this newsletter of going over exactly what to do and why timing the market is just not always a good thing. You were sitting there after Liberation Day going, oh, I'm in all cash, but you didn't get back in. There's a psychology to this. His point, it's done, and the timing of the market often leads to anxiety and doubt when things don't go your way. Rather than focusing on the past, focus on the future. That's the point. Don't look at, oh my God, I made a mistake, I didn't get back in. Look to tomorrow. And that's what Druckenmiller says. Druckenmiller, I like the thought of not investing in today. Invest in tomorrow. Have a thesis, have a plan, and be flexible if you're wrong. This is a great thread from a legendary guy. Okay? Remember, last year at this time, he went on CNBC and he said, I heard the president of Argentina talking at Davos. I liked it so much. I just asked Perplexity what the top 3 ETFs were in Argentina, and I went and bought them, and I did the research later. It's a great, great thread. Now, I don't do options, but Ed Corona put out learning to trade options for free. Okay, it is on my Substack. I will put it in the newsletter today, a link to Ed's free course. It is free. I don't do options. It's not my thing. Ed has told me, well, we can teach you. I don't have the mind for it. Okay, and I am doing a lot on Instagram, by the way. The daily.stock.pick account, I'm remixing a lot. Okay, Warren Buffett goes over, it's a marathon, not a sprint. Why doesn't everyone do what you do? And he goes over it. Okay, and then here's a nice little clip from Peter Lynch. What people don't understand is that it's very simple. It's very simple. There's 100% correlation with what happens to a company's earnings and the stock price. That's it. It's a great quote from him. So if you have any questions, you can hit me up. My email's here on Linktree. Okay. I will tell you all of the things that you saw me go over in Seeking Alpha. From the quant, things of that sort. I will go over it in many other podcasts in detail. But I suggest this bundle. This bundle is the greatest thing. It saves you $159. Okay, you get Alpha Picks, which is a portfolio that has beaten the S&P 146% versus 49% during the same time. It is 2 stocks, one at the first of the month, one on the 15th of the month. They tell you when to sell. And by the way, I looked at this. It is outperforming over the last month. Outperforming. Even though the last month has been great in the market, Alpha Picks is outperforming. And if you just want Seeking Alpha, you don't want that portfolio, okay? You don't want this bundle. And you just want Seeking Alpha Premium for the quant and to be able to quickly look at Apple, the multiple things of that sort. You can get $30 off and a free 7-day trial. Again, that is the third link right here. And if you just want Alpha Picks by itself, you can get the newsletter. And since we are in a bull market, and I do think we're in a bull market, I often suggest having a separate account from your trading account where you put those little, put some money in that you were going to do on sports betting. You save, say you don't go to Starbucks for a week and you save $20. Put it into Webull and start YOLOing. Okay, on stocks. I have turned $1,000 into, let's see where my Webull is, $11,600. Okay, 11,600. And it goes up and down because it is significantly risky. That portfolio is significantly risky, but I like it. And if you want to set alerts or do anything, again, Trendspider is the way to go. If you have any questions, hit me up. I thought it was going to be a lot longer, but it only turned out to be a 40-minute episode. I probably didn't go into depth. If there's anything that you have questions on, seriously, just respond to the email that you get from the newsletter or hit me up with the email address right here. Again, everything is right here on the Linktree. There's a lot. Support the podcast. Go to Linktree, click on a couple of links, and buy some stuff. Again, I'm probably all of this I get some type of referral on. Savvy Trader, you can follow my trades. Gift me with Venmo, PayPal, or Cash App if you've made money. But again, and congratulations to Scotty Scheffler, who won the PGA championship yesterday. And Larry, I did not know it was PGA week when I said, what the hell are you talking about, PGA championship? I was so consumed with guest podcast appearances and stuff like that. Just last week was a hell of a week. This week is going to be a hell of a week too. So have a great week. I hope we wind up a little bit more positive. Let's see. We're going to go in and look at the cues to see where we've come back. We haven't really moved, I don't think, off of that, I mean, we trended down and we've kind of moved a little bit up. You're off the lows, at 6 a.m., but not by much. Again, I would expect us to end higher, but not positive. Have a great day. I will talk to you tomorrow. See you. Bye.
Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears. Tune in daily, don't miss a single show. Sign up for the newsletter, let us help you grow. Taking risks, making moves, seeking success. Together we'll conquer, no room for any less. Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears.